Russian President Vladimir Putin held talks with Ethiopian Prime Minister Abiy Ahmed on Wednesday ahead of a Russia-Africa summit. Putin has billed the two-day summit that opens in St. Petersburg on Thursday as a major event that will help bolster ties with the continent of one.
Imagine a single bold contract, $1 billion, igniting an industrial revolution in one of Africa's fastest-growing nations. A contract that could reshape global aluminum supply, fire up factories, create thousands of jobs, and thrust a once import-dependent country into the spotlight as a manufacturing powerhouse. Today, that contract has been signed and the world should be watching. Today, we tell the story of how a Russian industrial giant is partnering with Ethiopia, not for gold or oil, but for aluminum. A deal with the potential to transform not just one country, but an entire region and impact global supply chains. What just happened? The deal in a nutshell. On November 14, 2025, Ethiopian Investment Holdings, EIH, the sovereign wealth fund of Ethiopia, signed a Memorandum of Understanding, MOU, with RUSAL, one of the world's largest aluminium producers, to build a massive aluminium smelter in Ethiopia. The project's initial phase is valued at approximately $1 billion. Once completed, the plant is expected to produce 500,000 metric tons of aluminum per year, placing Ethiopia firmly on the map as a significant aluminium producer. The plan: it will take 3 to 4 years to build, and once operational, the plant could sustain production for the next 50 years. A long-term industrial commitment. This is not just a short-term investment. This is a vision for decades of manufacturing, export, and industrial growth. Why Ethiopia and why now? Why would RUSAL choose Ethiopia? And why is Ethiopia ready to commit to such an ambitious project? Here's why this deal makes sense for both. Hydropower and cheap energy. Aluminum smelting is incredibly energy intensive without cheap, stable electricity. It's almost impossible to run profitably. That's where Ethiopia's edge comes in. The country has abundant hydropower resources, making renewable energy readily available for such heavy industry. This means the smelter could be powered by green energy, potentially making Ethiopian aluminum more attractive to environmentally conscious buyers globally, reducing imports, saving foreign currency. Historically, Ethiopia has imported a large portion of its aluminum needs. By building its own smelter, the country aims to cut down on costly aluminum imports, conserving foreign currency and boosting self-sufficiency. Over time, local industries, construction, manufacturing, possibly even export-oriented sectors could benefit from more stable, locally produced aluminium supply. Strategic position and export potential. With a 500,000-ton annual capacity, Ethiopia could serve not only its own domestic demand, but also become a major exporter tapping regional and global markets. For RUSAL, this project diversifies its output beyond traditional regions and potentially unstable markets, spreading risk and broadening its global footprint. Long-term industrial transformation. This smelter could become the cornerstone for downstream industries, aluminum processing, fabrication, manufacturing sectors that often follow once primary production is secure. It signals that Ethiopia wants to move beyond raw material exports to full industrialization, capturing more value locally. What this could mean. This isn't just about aluminum. This could be a turning point for Ethiopia and maybe for Africa. Industrial awakening for Ethiopia and Africa. If everything goes according to plan, Ethiopia could join the ranks of serious aluminium-producing nations in Africa alongside countries like South Africa, Mozambique, and Egypt. A successful smelter could attract more investments like steel, manufacturing, metalworking, construction, creating a ripple effect of industrial development, jobs, skills, and local growth. A project of this magnitude likely brings thousands of jobs directly in the plant, and indirectly in supporting industries like logistics, processing, maintenance, and services. Many of these jobs would require technical and engineering skills, helping build a more skilled workforce. Local communities could benefit from infrastructure development, improved standards of living, and growth of ancillary businesses. The smelter could become a hub around which a thriving industrial zone emerges. Global aluminum supply shifts. For the global aluminum market, this is more than just one new plant. It's a sign of shifting production geography. As companies search for lower cost and greener energy, Emerging economies like Ethiopia become attractive alternatives. Over time, supply from Ethiopia could influence global aluminium prices, trade flows, and even push more companies to consider green-powered production. Challenges and what could go wrong. Of course, no megaproject comes without risks. Here are some of the potential hurdles and what to watch out for. Electricity supply reliability. While hydropower is Ethiopia's strength, large-scale smelting requires huge, stable power supply. Seasonal fluctuations, droughts, or grid instability could disrupt operations. Feedstock sourcing. Ethiopia may not yet have sufficiently large bauxite reserves to support aluminum production over decades. That means initial raw materials might need to be imported, reducing some of the expected economic gains. Environmental and social impact. Smelting operations produce waste, require substantial water and energy, and can impact local communities if not managed responsibly. Long-term environmental planning, regulation, and community engagement will be critical. Market volatility. Aluminum prices globally fluctuate. If prices drop or global demand softens, the plant might face profitability challenges, especially given high initial investment and operating costs. Implementation risk. Large-scale infrastructure projects in emerging economies often face delays in bureaucracy, funding challenges, logistical issues, or political instability can derail even well-intentioned plans. So the potential is enormous, but so is the responsibility. This deal could mark a new era, but only if handled with foresight, transparency, and long-term vision. What could the future hold? Scenarios and possibilities. Let's imagine possible futures if the project goes well, and what might unfold in the next 5 to 10 years. Best case, Ethiopia emerges as an African aluminum hub. The smelter becomes fully operational in 3 to 4 years, and Ethiopia begins producing hundreds of thousands of tons of aluminum annually. The country becomes a net exporter, supplying both domestic demand and exporting to neighboring African markets and beyond. Downstream industries, metal fabrication, manufacturing, construction emerge around the smelter, creating jobs and boosting local economies. Technical training institutes are established to build local expertise. Other foreign investors take note. Seeing success, more industrial investments follow not just metals, but manufacturing, energy, infrastructure. Ethiopia begins to industrialize rapidly. The global aluminum supply chain becomes more diversified and resilient. Europe, Asia, the Middle East, and Africa benefit from more distributed production, possibly reducing cost and environmental footprint. This is the industrial revolution in slow motion, with Ethiopia transforming from raw material importer to manufacturing exporter. Moderate case, mixed success but steady gains. The plant opens, but perhaps at slightly lower capacity or with some delays. Domestic consumption grows. Ethiopia relies less on imports. Some exports begin, but global supply influence remains limited. Local industries do benefit moderately, but the hoped-for industrial boom is slower than expected due to infrastructure gaps, supply chain challenges, or global market fluctuations. Nonetheless, the project provides jobs, technical training, and a base for future industrial ventures. The smelter remains a strategic asset, though the transformation is gradual. Worst case, challenges derail full potential. Power supply issues, feedstock constraints, or environmental social pushback slow or stall the project. Capacity remains underutilized. The economic gains are limited. Jobs are fewer than expected. Export potential remains untapped. The project becomes a cautionary tale, reminding investors and governments of the risks of large-scale industrial investments in emerging economies. But all these scenarios depend on execution, management, governance, and long-term vision. This $1 billion agreement between RUSAL and Ethiopian Investment Holdings is more than a business deal. It's a bold statement that industrial transformation is possible beyond traditional global powerhouses, that a country with ambition and green energy can aim to build not just factories, but a future. If you found this story as fascinating as I do, hit that like button, smash subscribe, and share this video with anyone who loves stories of ambition, transformation, and big ideas. The world is changing, and we're here to witness it.